ಆಯ್ತಾ? ಜೂಮ್ ಸ್ವಲ್ಪ ಸೌಂಡ್ ಚೆಕ್ ಮಾಡೋ ಸೆಟ್ಟಿಂಗ್ ಬರ್ತದೆ ಇಡಬೇಕು ನೀನು. ಅದೇ ಮತ್ತೆ ಇದು ಚೆಕ್ ಮಾಡೋದು ಒಳಗೆ ಆಯ್ತಾ? ಮುಗಿತಾ? ನಂದು ಮುಗೀತು. ಒಂದು ನಿಮಿಷ ಇದನ್ನು ಕ್ಲೋಸ್ ಮಾಡಬೇಕು. ಈ ಸ್ವಲ್ಪ ನೀವು ಹಲೋ ಅಂತ ಅಂತೀವಿ ಅಣ್ಣ ಅದು ಬರುತ್ತಣ್ಣ. ಇದ್ರ ಚೆಕ್ ಮಾಡಿ ನಿಮ್ದ್ರ ಇಲ್ಲ ಇಲ್ಲಿ ಮೈ
ಹಲೋ ಹಲೋ ಹಲೋ
ಹಲೋ ಹಲೋ
Now we are going to start the expected program, that is budget analysis 21-22. I request our president, Sri Perikal Sundar, followed by senior vice president I.S. Prasad and vice president and the speakers, along with our chairman, Nityananda sir, to come and provide the Thank you, sir. Now, as a token of welcome from KSFC, I request our President Sri Perikal Sundar, FKC sir. I am the front of KSFC, that slip of tongue. So I request our President of FKCCI to welcome the speakers by offering the bouquet. And now, Mr. Shekhar Viswanathan, Senior Vice President, Vice Chairman, retired from Kirloskar Toyota, he is being honored. Next, Shankar, Senior Advocate, Supreme Court, will be honored by our President and Vice President. Now I request the sponsor of this program, Mr. Deepak Kumar Jain, to be facilitated by our Senior Vice President and the President. Thank you, sir. All you are aware that Honorable Finance Minister has placed the central budget on 1st of February 2021. Now we are here to analyze pros and cons and the expectations of the public and the trade, industry, and manufacturing sector. We have eminent speakers here to speak on this subject. Now, as a part of this, I request our President, Sri Perikal Sundar, to offer the welcome address. Sri Perikal Sundar.
ಎಲ್ಲರಿಗೂ ನಮಸ್ಕಾರ. ಗುಡ್ ಈವ್ನಿಂಗ್. Mr. Narendra Pani, economist, the virtual mode attended. Sri Shekhar Vishwanath, Vice Chairman, Toyota Kirloskar Motor, retired. A. Shankar, Senior Advocate, Supreme Court of India. Sri Deepak Kumar Jain, Founder, Accolade Advisory and IndiaGST.com. And CA Nityananda, Chairman, Direct Taxes, Corporate Law and Central Taxes Committee of KCCI. CIS Prasad, Senior Vice President of KCCI. PV Gopal Reddy, Vice President of KCCI. All the past President and MC members who are presently physically and virtually. I wholeheartedly welcome to all the participants for today's program. We are here to understand the analysis of Union Budget of 2021 presented by Honorable Finance Minister Srimati Nirmala Sitharaman on 1st February 2021. One should remember that it is highly impossible to meet the expectation of the stakeholders for all the sectors while the preparing national budget. It was thought that the common man will be burdened with additional taxes, compensate and huge amount spending in the fighting against the global pandemic. However, that is not to the scene and it is the relief for the common man. Insignificant changes to the taxation process Honorable Finance Minister announced the scrapping of the income tax senior citizen of certain conditions and the reduction of the time period of tax assessment among the measurement startup will get the extension their tax holiday for the additional year. The fiscal deficit to set jump 9.5% of the GDP 2021, a slumping government revenue amid the COVID-19 pandemic has led to the sharp rising deficit. Now fiscal deficit is a 2021 is the pledged at the 6.8 of GDP. The allocation of 35,000 crores for the COVID-19 free vaccination is the welcoming the future. The massive reinvestment plan, 1.75 lakh crores of the privatization of the port management and issues, infrastructure funds, along with the hiking of the foreign investment limited insurance sector to the 74% of major economic process. MSME, which is the major employee in the country, need to handhold in these challenging times. The continuation of the Atmanirbhar package is only the solace provided in the budget. The reduction of steel import duty, including the steel scrap, should bring down to the steel prices, which is the skyrocket in the recent times. And also, government should see that the local catalyst organization does not operating should channelize the steel supply, subsidized price of to MSME. Recently, petroleum price hike at most on the daily basis. The major component of the price is the various taxation. Government should think reduction of the taxes levied reduced to the petroleum prices. The announcement provision of 7 mega textile park, a welcome future in the order of giving the recognition of NEP 2020. The government has announced over 15,000 schools in the quality strengthened to the under the scheme. The finance minister announced the increase of minimum support price, which is welcome for the signing for the farmers. In the future incentive, digital transaction and a reduction of compliance burden, it is proposed to increase limit tax audit such persons of 5 crores to 10 crores, provided the assessee has completed 95% of financial transaction through digital transactions. Under the CGST requirement for furnishing the audit reconciliation statement, Forum 9C is done where the and self-certification in the place of is the welcome sign. The tax release to senior citizen, faceless tribunal hearing are the welcome. The proposal of reduction of the time limit reopening the IT assessment 3 years from the present 6 years is the welcome move. As so far, state of Karnataka, major allocation only is the metro, Bangalore metro is a significant announcement. Otherwise, infrastructure project, railway extensions, the state has not given to the due performance.
Writing a plan for strong credit.
However, the budget focus, economic development, infrastructure, and health will be definitely putting India back on the growth of the trajectory after the unprecedented past financial year. The budget less encourage for the state of Karnataka, but good on the balancing of these challenging time. The overall balancing 2021 is the post-COVID period. The speaker will here with analyze the budget under the various components like direct taxes, indirect taxes, microeconomy, analysis, GDP, etc. The panel experts may also discuss the advise the chamber on the issues taken up in the government to getting this requirement and all support to the MSME, business and trade community. I end my speech. I once again welcome to all the speakers and the participants who are physically and presently. Thank you, one and all.
Thank you, President sir, for your inspiring and overall picture leading the welcome speech. Now the moment we all are waiting for, I request the dignitaries on the dais to inaugurate the function by raising the lamp. Let us join hands for inaugurating the function. Thank you. Thank you, sir, for inaugurating the function. Now I request Sri Nityanand sir, Chairman and Director Executive KCCI, to pass his observations.
Mr. President, all the other office bearers, distinguished panelists, Secretary General, past presidents, esteemed chairman of various committees, my esteemed colleagues on the board of KCCI, heads of various associations and bodies, members representing the trade industry, services and profession, ladies and gentlemen. I will take a little more time when we start the panel discussion. Initial remarks on a budget was presented for 2 long hours and has umpteen number of amendments, whether it be the Income Tax Act, be the GST, be the customs duty, is a challenging task. The budget may be the first budget of this decade. It may be called the digital budget. It may be called the post-corona budget. It may be called the Atmanirbhar budget. That's all okay, whatever nomenclatures are given. But what we are interested, I can only give a very brief introductory remark by asking 3-4 questions which arise in our minds. Will this budget give the employment to the poor? Will it make lives of middle class better? Will businesses have a stable economic, industrial, labor and tax policy? Will tax system, while becoming faceless, will it be baseless also? Is a worry in our minds. If these answers are answered in the positive, then the budget is good. Good for the nation, good for all of us. That's what I hope. That's what let's discuss along with the expert panelists. Thanks for coming, all of you, and joining us in this panel discussion. Thank you.
Thank you, sir. Now, may I request Mr. Deepak Kumar Jay to give his initial remarks about the central budget.
Good evening. President Mr. Gautam Sundar, Senior Vice President Mr. S. Prasad, Vice President Mr. B.V. Gopal Reddy, my fellow analysts, dignitaries, and my fellow colleagues. Very happy and very, say, fortunate has the privilege to share the rise and have this as a joint session on Union Budget 2021. Definitely, I think as Mr. Nityananda mentioned, there's a lot of expectations which each of us have from the budget. And each time the finance minister is basically kind of, before the budget and after the budget, evaluated in terms of expectations and how the budget has kind of met those expectations. Definitely, there are various parameters, indicators. I'm sure the finance minister definitely has a tall task, and I'm sure meet some of those expectations and probably fall invariably short on the other expectations. Markets have really reacted very, very well, and I think the industry segment from a taxation perspective, I think pre-budget definitely pre-GST, I would say for both direct and indirect tax, we had a lot of points which we could kind of cover thanks to the budget proposals. After GST has kind of come in, for speakers like me, particularly for indirect tax, there's probably very little which is kind of left in terms of discussion, but I'm sure we will kind of do justice in terms of kind of covering. So I think the panel here, the eminent panel which is kind of sitting here, definitely will kind of give the entire gist of the budget to you. It is very, and I'm sure this time we have had the opportunity to kind of have people participate not only physically, but also through digital means, where we have had about the amount of 350 people participating through Zoom. So at this context, let me also kind of apologize that we started around 12 minutes late, largely on account of there was an issue with respect to internet. So that caused delay. I'm sure the session which is kind of late now, I'm sure I would request each of you to kind of take the best use of this session. And for us, it is, as I said, a sheer privilege and a proud moment to kind of participate with FKCCI to this wonderful event. Thank you so much. I look forward to the session.
Thank you, sir. Now we have 4 speakers today. Mr. Narendra Prani, economist, who is virtually available. And we have Shekhar Vishwanathan, Vice Chairman at Toyota Kirloskar Motors, who is retired. Mr. A. Shankar, Senior Advocate Supreme Court, and Mr. Deepak Kumar Jain. Now, may I request our Senior Vice President to introduce Narendra Prani and Mr. A. Shankar. Thank you, sir.
Good evening. My President, Sri Parikalam Sundar, Vice President Gopal Reddy, the Chairman of Central Taxes, Sri N. Nityananda. Today's eminent speakers, Dr. Narendra Prani, A. Shankar, Shekhar Vishwanathan, and Deepak Kumar Jain. My dear past questions and members and all the participants, I think first time we have been seeing after in our lifetime the impact of COVID, which has been changed the way of living, the way of learning. It has posed challenges to existence of life versus survival of life. I think first time in the history of our independence, the Honorable Finance Minister has been brought the budget through digital without being printed hard copy. That means it's been coded and encrypted. To analyze the budget and to decode the budget, we have 4 eminent speakers. Dr. Narendra Prani as economist, A. Shankar is standing counsel, and Deepak Kumar Jain on indirect taxes, and again Shekhar Vishwanath will on several issues. I have a pleasant task to introduce today's one of the guest speaker, Dr. Narendra Prani. Dr. Narendra Prani is a professor and dean, School of Social Sciences, National Institute of Advanced Studies, Bangalore. An economist by training, he has over the last 4 decades worked in both academic and media institutions. Worked in the Indian Institute of Management, Bangalore, and the Economic Times. He is an author of books Inclusive Economics, Gandhian Method, and Contemporary Policy, says Redefining Conservatism, Bias of Indian Economic Policy, Reforms to Preempt Change, Land Legislation in Karnataka. He has also published extensively in academic journals. He is the author of an explainer on the World Trade Organization in monograph and theatre in 2 novels. He has written several hundred articles in the editorial page of national newspapers. He has been commenting on the union budget since 1993. He has joined to virtual mode. I extend with brief introduction, have great pleasure in presenting. I think Dr. Narendra Pan, if you can able to show them, Nagaraj. So he's in the virtual mode. Welcome, sir. And I will have delighted and also pleasant task to introduce the another guest speaker of this today's session. A. Shankar is a chartered accountant by qualification, a very renowned advocate by profession. He is a practicing advocate for the last 17 years in the High Court of Karnataka and Supreme Court of India. He was designated as senior advocate by the High Court of Karnataka in November 2018. He was practicing CA for prior to becoming advocate, he was practicing for last 20 years and mainly involved in representation litigation matters. He has presented a number of papers in various seminars and conferences conducted by Institute of Chartered Accountants of India, both at regional and national level. He is an expert in search and survey matters and real estate transactions. He has argued many landmark cases, which has been widely reported in the ITR and CTR. I think as fellow chartered accountant, he is always passionate to listen to him for a number of hours, unlimited hours, by his address to all the members. With this brief introduction, I have great pleasure in presenting Sri A. Shankar before all of you. Thank you.
Thank you, sir. Now we have another 2 speakers to be introduced, Shekhar Vishwanathan and Vishnu Kumar Jain. Now I request our Vice President, Sri Gopala Reddy, to introduce these 2 speakers.
Hello, Namaskara. Today I will get to introduce our well-known speaker, Shekhar Vishwanath, date of birth 16 November 1956, education BA Economics, member of Institute of Chartered Accountants of India, work experience, Unit Trust of India, worked in finance and investment division, and the Chase Mahantan Bank, second vice president, trade, finance, investment banking. Lazard Brothers worked as the international division, Aldia Petrochemicals Limited, worked as a general manager, finance, Toyota Kirloskar Motors Private Limited, worked for the last 22 years as a vice president and a whole-time director, retired in November 2020. Also director in foreign companies, L&T Mitsubishi Boilers, L&T Mitsubishi Turbines, and Anor Ascent Reconstruction Company, ASM Technology Listed Company, past president of Bangalore BCCI and Industries, past chairman CII and chairman tax group of SIM, chairman FICCI Karnataka, chairman EV committee FICCI. Here is Mr. Vishwanath, Shekhar Vishwanath. And one more, Mr. Deepak Kumar Jain, BCom FCA, ACS LLP, fellow member of Institute of Chartered Accountants of India, assistant member, Institute of Company Secretariat of India, Bachelor of Law. Deepak has over 20 years of experience in indirect taxes, including 9 years in a big 4 accounting firms. Deepak is the founder of Accolade Advisor Private Limited and the domain appindiagst.com, and provides professional advisory, compliance and litigation support, service to Indian and all, as well as multinational companies on excise, customs, service tax, VAT, entry tax, and FTP, SEZ matters. Deepak has authored a book on anti-dumping, anti-subsidy, and safeguard measures, published by Institute of Chartered Accountants of India in March 2007. A book on goods and service tax, published by Bangalore Chamber of Industries and Commerce in Jan 2010. Co-authored a book on service tax in Nutshells, published by Federation of Karnataka Chamber of Commerce and Industries And Deepak is also a part of the expert committee on indirect taxes of director associations and bodies including BCIC, FKCCI, and KSCAA. Thank you.
Thank you, sir. Now, as a token of love and respect, FKCCI would like to honor the eminent speakers. I request the office bearers of FKCCI to honor, of course, Mr. Narendra Pani is virtually available. And now I request our office bearers to honor Sekhar Vishwanathan from Toyota Commercial Company. Thank you, sir. Now, may I request the office bearers to honor A. Shankar, senior advocate, who is one of the eminent speakers in today's program. Thank you, sir. Now, I request to honor Deepak Kumar Jain, who is the sponsor of this program. I request our director, Sri Prabhudev Aradhya, to come and join for honoring the speaker, Deepak Kumar Jain. Thank you, sir. Now, the technical session, the most important aspect of today's program, that is the speech by the eminent speakers, will commence. I request the dignitaries to take the respective places in front of the platform.
Every screen share ಮಾಡಿ. Screen share.
Good evening, friends. We'll start the panel discussion now. The format, what has been designed today for the panel discussion on union budget, that each of our panelists will speak for about 10 minutes to 12 minutes on their respective areas of specialization, which we have requested. So first, Dr. Narendra Pani, who is an eminent economist, who was with the Economic Times, who was with the IAM, as he has been introduced already. He will be speaking on the macroeconomic aspects of this budget. May I request Professor to kindly start his address, please, virtually.
Yeah, thank you for this opportunity to present a set of ideas here for your consideration. A time like this, when we look at the impact of COVID, it is tempting to see it entirely in terms of a... Sorry? Hello? Can you hear me? Hello, can I be heard? Hello,
Yes, sir.
can you hear me now?
Very loud and clear, sir.
Oh, thank you. Uh, s- well, I just wanted to thank you for this opportunity to share a few ideas on on the budget. At a time of in a crisis like COVID, we tend to see it in terms of its short-term impact, which is undoubtedly very severe. You have the lockdown and other problems with it. But there is also a long-term impact that is there on the economy as a part of of the reactions to the crisis. And I think what we need to see the budget in the context of both these effects. The immediate impact, of course, is directly on the deficit itself, right? On the revenues that could be generated at a time when the economy has faced a lockdown, and so it is not entirely unexpected that you had a decline of 23% in the revenue receipts, both tax and non-tax. Right? What is not often considered is that alongside the sort of shortfall, you had a need to spend both not later to increase the demand, but first even to just generate a basic state support for people facing the crisis. So the deficit that we see is not just the result of a massive decline in revenue, but also a very substantial increase of over 13.4% in expenditure. Right? Now, in choosing this route, the government, the finance minister has shown a willingness to accept a very high deficit level. It was expected that deficit would sort of double from the budget estimate of 3.5% of GDP to 7, but now she has gone for a much higher deficit of 9.5%. And this problem or this issue will remain with us because she has also ensured that it's not a one-off exercise, that the deficits will continue to be high until 25, 26. And even then, the finance minister only expects to bring it down to about 4.5%, which is still much above the budgeted figure for the current year. So you have a longer term problem of a deficit. Now, this, whether it's inflationary or not, we will see there is a risk involved in that, but it was a risk I don't think the finance minister could have avoided. There was, as I said, both a massive reduction in revenue and a need to spend. But the issues that we need to consider is what is the longer term impact of this continuing deficit, and that much will be influenced to a very great extent by the route the finance minister has taken to fill the deficit, which is primarily based on borrowing. Right, borrowings have increased by 132%. Right, this has its impact on interest payments. In the very next year, you'll see interest payments going up by 16.9% is what the budget expects. And that assumes that we will not get into further borrowing in the remaining months beyond what the budget has anticipated. And so this is an issue that we'll need to consider because our previous experience with borrowing has not been very great. You had the former Prime Minister Rajiv Gandhi trying to borrow his way out of trouble from 1985, leading to the crisis of 91, 92. And then once again, you had the problem of in 2008, where large deficits were kept. It kept the growth rate going at the time of an international financial crisis. But the ability to come out of it proved to be a problem, leading to the slump in 2011-12. So this is a longer term issue that we'll have to see how how the government manages that. The point that what makes it more difficult for the government is that bulk of the additional expenditure in the forthcoming years is going into what can be called mobility infrastructure. That is roads, railways, elements like that. On their own, these investments will not generate the return to payback for the borrowing. right? As we know that the returns on roads is very low, as it is in the case of railways as well. So direct returns are low. The expectation is that if these infrastructure improvements lead to higher growth, we can generate the revenues required to repay these additional borrowings, right? But the issue really that is coming up is whether a continuation of investment in mobility infrastructure is a good enough strategy for growth. We have already seen in the past that this strategy has begun to fade before COVID hit us. We had a slowdown in the growth rate, and now we are having an even greater kind of a challenge, because the whole mobility system worked not just in terms of products, but also in terms of people, and perhaps more important in terms of people. You had semi-skilled and relatively low-skilled workers coming in from the states in the north and the east to the production centers in the south and the West. And that process was disrupted by the COVID crisis. So you're going to have a challenge about whether they come back, and already whether all of them come back. Some of them undoubtedly will, but any reduction in the number of those workers coming back to work will result in a certain level of wage inflation. In fact, there are indicators that this is already happening, and that the first signs of that have already come up, particularly in states like Maharashtra. But it's a question of whether we can go forward with that and see where that takes us. The important thing was whether we had an alternative of developing a different strategy. If we could we have looked forward to a strategy in which we did not rely so much on the mobility of the workforce. And this is something that Bangalore, in fact, has shown what can be done. Back in the 70s, you had heavy investment in industrial estates, and that formed the basis for the garment boom that took place in the 80s and even in the 90s. Okay? So whether similar strategies can be followed in the more less industrialized parts of the country, in Bihar, Jharkhand, Eastern UP, and places like that. But no such effort has been made in this budget. The infrastructure allocations are entirely on mobility. Right? In fact, the highways, national highways, have got additional funding even during the current year when there is a general decline in the availability of resources. So we're not sure where that additional, if the strategy is going, where the additional production is going to come from. One approach that the budget seems to have taken towards that end is to step up customs duties, thereby offering protection to Indian industry. But as we have seen through the 80s, this is a strategy that is fraught with its own risks. Right? This protectionism leads to a situation where prices there's no great pressure to keep prices down, at least within the domestic market. But in the new economy, or in the new globalized economy that has emerged, this has an additional problem, because many of the products in the Indian market have components imported from the from the advanced world or from other countries. And if we raise customs duties, it increases the cost of those products and makes us even less competitive. Right? The lack of competitiveness will be seen directly on imports and on exports, and exports are doing less well than they should be. We're already seeing that as a major issue that has emerged. But more than that, you will find that the problem will emerge in terms of the ability of Indian industry itself to see itself as a global player, and to go forward keeping those all aspects in mind. There's now, with the free mobility of capital, there's even the possibility of Indian industry or Indian capital itself seeking opportunities in other countries which have which offer better returns and more and greater competitiveness. Now, this problem can be overcome in the short run by the fact that we have huge foreign exchange reserves. Right? The foreign exchange reserves are now at an all-time high, and we have and it promises to stay there for a while. But this approach comes with a dilemma, really, or really with a kind of a paradox. One is, despite the massive inflows of foreign exchange, it is not reflected in higher investment in the country. The gross fixed capital formation in the latest economic survey is just about 24% of GDP, compared to a high of 34% even around a decade ago. Right? So you have an issue here of money coming in but not being invested. Bulk of the foreign investment is actually going into buying equity in Indian firms, right? And so that once but that additional equity, once they come in, they're not necessarily investing within the country. And that once again is a pattern of globalization. If I get a global firm, if an Indian firm becomes global, foreign investment comes to take a share of it, not necessarily to influence their decisions in India, but to influence their decisions globally. And so this process is now very deeply entrenched. And the question really is that where would we go from here? Is it possible to break out of these norms and to see whether we have growth? So we can see this budget. We can go into these topics in detail, but I think I've come to the end of the time allotted to me. So I will just end by pointing out to two things. One is that in the short term, the finance minister has faced difficult choices. And in those difficult choices, she has made some decisions, including relying very heavily on borrowing. We can debate it, but I'm sure we must debate it keeping in mind the very serious crisis the finance minister faced and what were the few options she had before her. What is for me a little greater concern is the long-term strategy in the budget. Long-term strategy is just suggests an attempt to return to a system where you can assume what economists would call perfect labor mobility, that you can have people thousands of kilometers away. The distance between work and home is thousands of kilometers, and that might work when everything is well. But it was already showing signs of running into trouble. And after the COVID crisis and the migrant crisis, we should really see how much of that recovery actually takes place. This is important because much of your 11.5% that is projected from a much lower base this year is dependent on that recovery taking place. So I'll stop here, but if there's anything further, we can discuss it. Thank you.
Thank you very much, Professor. That was a brilliant opening remarks by you on the macroeconomic aspects of this union budget. We will move on to Mr. Shekhar Vishwanath. We look forward to what is in the budget for the trade industry and the business as a whole. Your take, please.
Yeah, good evening to all of you. First of all, I must thank FKCCI and the office bearers for having invited me over here. And a very good evening to all our panelists, including Dr. Pani, who I thought I would have the privilege of meeting again, but unfortunately he has not been able to come. But it's good hearing you, Dr. Pani.
Thank you.
And all your remarks on the budget.
Thank you.
I would first like to begin by stating only this. We all know that the finance minister has had a very, very difficult time given the pandemic that broke loose. And her remarks on spend, spend, and spend is perhaps what was necessary just to get us out of the woods, so to speak. Going forward, as Dr. Narendra Pani pointed out, there is this whole thing of this deficit, 9.5%, and then it's still being projected at about 6.5%. And I doubt very much that they'll be able to hold on to it. But what is the implication of this huge fiscal deficit, and what does it mean for both the corporate sector and the Aam Aadmi? And I think the one word that we're all staring at is inflation. India has done pretty well in containing inflation over the last 6 to 10 years, but I doubt whether we'll be able to do this going forward. And I think that's the one thing that we need to, be on the lookout for. The slightest sign of any inflation coming in, there has to be measures taken that will actually dumb down the economy, and that may hurt growth. But it's a choice that we will have to make as we go into the next year, the next fiscal year. And this is the one point that I'd like to flag as a very, very serious issue. It's nobody's fault. It's the way it has happened. But as a nation, we need to tackle it. And I think that's the point, that's a central point I would like to make. Corporates will have to live with the fact that the demand for their products, if inflation does rear its head, may not be as strong as they would like it to be. This is something that's going that the corporates will have to grapple with based on what products they are selling. If it's FMCG, they will have to have one strategy for the marketplace. If it's engineering goods and capital goods, it will have to be a slightly different strategy in terms of cost containment, in terms of increasing volumes, etc. So this is one thing that I would like to flag. The second point that I would like to make, and this is something that has been with us in the past as well, the fact that the borrowings will have to be of a very, very high magnitude will also mean that the private sector borrowings from the marketplace will get crowded out. And this is going to hurt the private sector as much as it's going to hurt the government. This is something that we have to watch out for, because what will then happen is interest rates will start rising. And this is something that every corporate has to keep in mind and has to plan for and has to address. The third point that I thought I would make, and this has again been touched upon by Dr. Pani quite adroitly, is the foreign exchange reserves side. The foreign exchange reserves have been happily at an all-time high and increasing. And I think this is some comfort that we can take. But let's also not forget that foreign currency debt of the country is also at a high. We didn't have this problem in 1991. The problem was one of short-term debt coming home to roost. We didn't have enough by way of foreign exchange reserves to pay your short-term debt, and therefore you came up short, and then all the reforms took place. But today you have a situation where you do have adequate foreign exchange reserves, which will take care of your foreign currency debt. But it's like being on a treadmill. You have to keep on attracting foreign currency reserves into the country. If you don't do that and we stop, then you're again in trouble. So I think that this is something that we need to keep in mind as we move forward. And particularly corporates will have to do that planning very well in terms of where they're going to be borrowing from, at what costs, what's going to be the effect on the rupee. And I do think that the rupee is going to drift downwards only because of inflationary conditions. One of the things that this budget has been much applauded for, and rightly so, is its focus on infrastructure and roads and road building, etc. The key is implementation of infrastructure. How quickly can you implement it? The time to start building a road and make it available for the public to use is what's going to be important and what's going to drive costs downward. I think the intent is correct. I do have questions about how fast we can implement some of these infrastructure projects, but I think as a nation we need to commit to the fact that we will implement this as quickly as possible. Oh, for the virtual people, and my apologies to the people who are listening in. Am I clear now? Okay. I would like to touch upon two aspects that the budget has touched upon. One is, of course, the fact that the public sector banks, two of them have been slated for privatization. And I think this is an excellent move because government needs to get out of the business of banking. And this is my firm view. Though, of course, if you take the example of Yes Bank, I think they've set a very, very bad example. And I do think that just because you move something to the private sector, we can't assume that everything will be hunky-dory. Yeah, I've been requested to use the podium because it will be more audible for the people who are logged in and listening into this program. Getting to the private sector banks, I was mentioning that what we ought to focus on is proper management of these banks. Just because you're moving it to the private sector, then you can't immediately assume that everything will be hunky-dory. I think there is a huge responsibility on the banking fraternity to start delivering in terms of lower NPAs, higher returns, and to make the banking sector sound. And I think this is a responsibility that we can't abdicate. Nevertheless, I do welcome the steps taken in terms of getting two public sector banks to be privatized. And I also believe that one insurance company is also slated for privatization. I would now like to touch upon certain MSME issues, the medium, small, and micro enterprises that really form the backbone of a lot of manufacturing that goes on in this country. I know that lots of money has been allocated, but the offtake of credit by MSMEs has been rather poor. It has been poor for a couple of reasons that I can think of. One is, of course, the fact that they're not able to service their borrowings, and therefore there is a marked reluctance on their part to borrow more. And why is this reluctance there? Simply because when they sell their products to their customers, their ability to realize proceeds and service the debt has been absent. And this has led to a vicious cycle where banks are then reluctant to lend to MSMEs. I think this cycle has to stop. And I do think that the responsibility is on the bigger players in industry to handhold and nurture MSMEs so that, one, they are able to get the confidence that they can produce, sell, realize the proceeds, and then keep that cycle going and turn it into a virtuous cycle. I think that's what the responsibility of the big players in industry has to be. I know for a fact that the auto industry does this and does this in a very, very systematic manner. The reason being that they want to get quality products, and therefore they handhold a lot of MSMEs who are tier 3 suppliers, tier 2 suppliers, who will be doing a process, or will be doing one process without hurting the environment, and who may be doing this in a way that will then keep the quality levels for the finished product at a high level. So the auto sector particularly has been taking this initiative, but I do think the time has come for all sectors to take this initiative of nurturing MSMEs and building them. The money is there. The money will come. But I do think if this responsibility can be taken by with the bigger players in industry and making sure that payments to MSMEs go out on time, that is more than the battle won. And I think that's what we all have to root for and hope for. I will now conclude my remarks by touching upon only one topic of mine, which is on the taxation front, which of course is not a budget exercise these days, but it's more it's an exercise where GST is involved, and certainly the auto sector needs to see a lowering of GSTs, because the GST rates, particularly on two-wheelers, why should two-wheeler people pay 28% when the manufacturer himself is making much less than that? I do think that there is a case for the government to address this and understand this. And while I would like to see this spread to not only two-wheelers, three-wheelers, and the buses and four-wheelers, at least we should make a beginning with two-wheelers and reducing the GST. Why am I bringing this GST aspect over here? Because in the overall mix of the resources being raised by the government, the GST has become a very important component, quite apart from the corporate taxes, the income tax that the government raises as a source of revenue. GST has become a very important component, and it will continue to become a more important factor in the government's budget making exercises. With this, let me stop, and I'm happy to take any questions during the panel discussion. Thank you very much.
Thank you very much, sir. It was a brilliant exposition of various aspects in the union budget on trade and industry. So, we've already visited Kashi and had the darshan of Vishwanath. Now we will visit Kailash and have Shankara's blessings. Shankar on direct taxes.
President and other members of the Managing Committee of FKCCI. I thank you for having given me an opportunity. At the very outset, I wish to place on record my deep sense of gratitude and respect for the Government Services Commission Commission has been a pillar of strength in my growth in the field of taxation. My respect to him. One of the oldest statements in Manu Shastra said, Yatra Nadyasti Pujyante, Tatra Ramante Devata. Where we respect one, there lives God. And we have a lady, our finance minister. And set you down and get into some brass tacks of what is the budget impact on direct taxes of the trade and industry. I no doubt know that trade and industry at a very large level looks into the macroeconomics, another aspect. The common normal trader at a country, direct tax, GST, customs are very, very important as they revolve around his day-to-day business requirements. 1961 was when the Income Tax Act was formally regularized from the 1922 British Act. And from then till now, approximately we have more than 7,000 amendments to the Income Tax Act. The reason, and even in this budget, we have more than about 70, 80 amendments. Each of the amendment on account of 3 or 4 factors, which on account of judicial pronouncement, mostly in favor of the businessmen and businesses. Government has never shown total acceptance of the decisions of the judicial system by completely accepting the decision and allowing that to percolate further, which ultimately will develop the economy at a very different macro level. This budget has effectively overruled more than 11 decisions in the courts by which the business community, the salary class, the people who want to sell property, the people who want to earn even interest. Very strangely, the interest on general provident fund was always exempt. But in this budget, they have evolved a clause that the exemption will be restricted to 2.5 lakhs interest. So if higher the interest, you get back into taxation. Yeah. Okay. Okay. I can actually speak louder. I was a little sober today. I normally speak very loudly, basically because I'm used to speaking in the court. So, because we need to ensure what thought process goes in our mind is translated into the mind of the judge. So, three things we normally do. We repeat, repeat, and repeat. That is, I'm not an astrologer. In a way, you said you will win. I recall a very interesting experience. One day I told a judge, I've never lost a case. He was very furious. Yesterday I declared the case against you. I said, no, sir, I still won the case. What do you mean by that? I represent the associates, the business class. So when my clients win, my associate win, the business class wins. My friend on the other side wins. My government wins, and I'm a part of that government, I still win. So I'm never on the losing side when I argue a tax matter. I'm always on the winning side. This budget, as said, has brought in more than 70, 80 in transformation into the business requirement. This is not the forum and the time to go class by class analysis. At a very large macro level, I would like to tell what probably affects the business community so that you would be able to make necessary adjustments in your activities so that it will be of some help. At the end of the day, if I have percolated two thought process in the budget which will help each one of you, some object is achieved. Broadly, the 15 aspects which I want to touch are: goodwill is a normal aspect which every business has. All these days, goodwill was categorized as a intangible asset entitled to depreciation. That is precisely what the National Supreme Court in Smith's Security said. This budget has taken away the right of a goodwill as an intangible asset and is denying the business community. The business is generally, goodwill is only in the business community, has denied depreciation on goodwill. To put it in practical terms, if a businessman sells his business to B with a goodwill, all these years, the person buying the product, buying the business, was entitled to a depreciation on the amount he was paid. Suppose a business was bought at 1 crore, out of which 30 lakhs was goodwill. On the 30 lakhs, he was entitled to depreciation over a period of time. This budget has taken away that right and said from now onwards, you will not be entitled to any depreciation of the goodwill. This is something which probably could have been avoided. Now, the next one, I'm not going by the order of the section, I'm going by one for you all and one against you all. Now, that gives you a little comfort in the system. Now, in so far as section reopening is concerned, they have given a very, very good thumbs up to the business community. All these years, reopening was based upon a recording of reasons by the assessing officer who has reason to believe that you have concealed or escaped income. You have escaped income and you could reopen for a period of 6 years and in case of certain contingencies, even up to 10 years. Now to the business community, this budget has shown class gesture to give you all the statement that your reopening will not be done for more than 3 years. Generally, unless the concealment part is more than 50 lakhs, then they have different time frame. Normal, average, compliant businessmen, the time limit for reopening has been reduced from 6 years to 3 years. It is a very welcome gesture, and in fact, this synchronizes with the concept that we trust the SSEs. We have reduced the taxes for a period of time. No doubt in the last 3-4 years, the rate of surcharge has actually gone up, but then probably at some high level we pay little higher taxes. But the trustworthiness of the paying business class is definitely going to help the business community, the SSE clan, that we will be able to face these things boldly. Coupled with this, another interesting aspect they've linked in this reopening. Before reopening, they are going to tell you, this is the information I have, this is what I propose to do, I will give you a notice between 15 and 30 days. Please explain now. If you explain now before reopening, there are not going to be any fresh assessment, and if your explanation is accepted, the chapter of reopening itself is closed. So they have given a window to the SSC class where they can completely close the entire reopening formality and procedure by they have some information with them through several sources today. Today, government has a lot of method of information. And in that information, they are going to use it and tell you this is what you have done. You come and explain this well within the law. And if the officer agrees, the reopening itself is closed. And that is a very, very welcome move. So that slowly, what was popularly known as tax terrorism will come down by this time. The next issue is going to be against this. What they have done is, when an SSC, who's a partner, retires from the partnership firm, a lot of businesses do, for whatever diverse reasons, either handing over to the next generation, or business partners, acquisitions, mergers, at small level. I am not into the big 7,000, 8,000 listed companies, the corporate level. They have their own methods of tax planning. To a common man, this sort of a change in partnership is a very regular feature. Now they have said, if a person draws amount in excess of the capital balance standing to your credit in the books of accounts of the partnership firm, then there will be a tax under 45(4) or 45(4)(a), as the case may be. Thank God it is not on the person receiving the money, but on the partnership firm which you are the earlier partner. But then this is going to make all these years, this was exempt from tax, basically because partnership firm was basically drawing what your money is. Now they have taken a view that if your capital balance was 10 lakhs and you are getting 20 lakhs, on the 10 lakhs the partnership firm must pay tax. The flip side of this is, if it was a tax on the SSC, he had to pay it. Now it will fall into the negotiation aspect, and probably certain businesses will get into litigation on account of numbers, but the taxing the withdrawal from a partnership firm in which you are a partner in excess of what you are may not be a welcome move and may not be appropriate in my view. The next one, which is good to not the business community alone, but anybody running a charitable organization, school, colleges, medical, hospitals, etc. All these years they had a limit of 1 crore for which there was an automatic exemption. That limit has been increased to 5 crores and it is definitely welcome. I wish time will come and it will go up to 10 crores. Something to do with the profession I am. They are going to have what is contemplated as a faceless income tax tribunal. It's a very interesting concept. The full scheme has not come down. I think probably in years to come, they probably allow the SSCs themselves to sit at home and argue their case. Your matter in Bangalore will be heard by some members in Agra. You can just log in and say thanks to lawyers and auditors, and you can just explain the case to the judge who will be hearing you. You will not even know who is going to hear you. This is basically to get into transparency, prevent collateral damages to the SSCs, and definitely this has good and bad. It's a question of how one views this aspect. One very important amendment they have done against the business community, which probably could have been avoided, is that if any business entity makes a transaction with any person for buying goods in excess of 50 lakhs in a year, the expected the government is you have to deduct TDS of the payment. Suppose you bought from one, let's say somebody is a rice merchant, he buys from a rice mill worth 5 crores, particular rice, then you have to deduct 0.01%. And if that person does not have a PAN number, you have to deduct 5%. So this is going to be a lot of difficulty. Basically, if you look at the method of tax collection, these things could have been avoided, basically because business is as it is struggling, and at this point of time, to burden the businesswomen with one more responsibility could have been avoided in this year at least. What the thought process of the finance ministry and the government is too early to predict. But I'm sure they would have some good and sound reasons to do so. But I do not approve. I'm not here to disprove what they did. But I personally believe this could have been definitely avoided. Settlement Commission was one of the means by which an S3 was settling his affairs to completely knock off penalty, prosecution, etc. And this commission has been completely closed. They are not going to have any settlement commission anymore with effect in some short date or today or tomorrow or 1st of February. Then over. Only pending applications they are going to call what is an interim board. Similarly, they have given an explanation. We had one advance ruling authority where businessmen, not the medium and small industry, little corporate, were entitled to go and get an advance ruling on certain matters. Now they are saying that no, the problem is instead of addressing the problem, they have now eliminated it. It is just like this tree is not giving fruit. This tree is not growing. I should nurture it and then do what it is. That has not been the thought process of the government. What they say is, it has to be headed by a Supreme Court judge and members have to be High Court judges. They are not getting, nobody is coming. So consequently what they have said is, we will now simply dismantle it. Rather than trying to find a method by which the advance ruling authority could have been put in such a manner, why do a judge do not want to go to advance ruling authority, most of them? Basically because their orders are subject matter of judicial scrutiny by the High Court. They have been in the High Court, their juniors are there, and after 1 year or 2 years they pass orders in advance ruling. This junior will come and say this order is not correct. The only tweak they could have made is remove the chairman of the advance ruling authority from the Supreme Court judge and made it at a High Court judge level. And like the central excise appeals in relation to classification, where the appeal lied directly to Supreme Court, they could have said from the advance ruling, if the matter had gone to Supreme Court directly, it was a good forum for settling certain amount of clarity in thought in respect of various aspects. They have also made a draconian amendment which businessmen need to be very cautious, and it should be conscious and have very clarity in it. All these years, if the Provident Fund ESI dues with respect to your employee was not paid in time but paid before the filing of the return, it was allowed. Now, all courts have held so like that. They have completely reversed all these decisions and say, in respect of your employee's contribution, if you do not pay within the due date under the Act, it will be permanently lost for you all. I seek the indulgence of this entire audience and the business community at large to be very conscious of its responsibility in respect of clearing the dues of its employees on time, and if that doesn't happen, that payment which you will be making will be perennially not allowed to you as a deduction, and depending on the size of your industry, it can have disastrous consequences. Sometimes a harmless life better than a disastrous truth. So you all have to understand the reality and make sure, lie or no lie, make the payment on the due date. That is something which is very, very essential for business community. The problem with advocates is if you give a mic, probably you can keep on and on. And I think probably I have touched out of 79 amendments, some 5, 6, 7 amendments which are useful to business community. We all live in hope. Hope sees the invisible. Hope feels the intangible. Hope achieves the impossible. And we should have hope that in years to come, the Income Tax Act will become a 10-page act which will be so easy to comply. And that is the one single message entire body of businessmen all over the country must keep on telling the government or whoever they are at the power to make sure you simplify the tax act, allow a common businessman to understand in easy, lucid language, and money will automatically come to the coffers. If half the time you're spending on only sorting out the procedures and your compliance levels, the business is actually suffering. Lastly, before I conclude, I recall the famous words of Sir Winston Churchill, who said, "The mind starts functioning when a child is born and stops when it faces an audience, more so an enlightened audience like you all." Thank you, gentlemen, for giving a patient hearing.
Thank you very much, Mr. Shankar. As always, you're wonderful. You brought out the positive and the negative aspects of the amendments. The taxation front, direct taxes front. Now on the indirect taxes front, the majority feel like, okay, some customs duty, begin something like that. But major changes have been done, including on what type of duties we can take credit of and what we are not entitled, what we thought is in our pocket is disappearing suddenly from the pocket. What it is Mr. Deepak will explain.
So I have the opportunity to say good evening twice here. Thank you, sir. File which is displayed is the long file, the smaller file, the second file, please. Yeah. I'll take the battle forward from what Mr. Narendra Pandey, Sheikh Vishwanath, and Mr. Shankar has kind of said. So I'll probably take about 10 minutes or so to kind of give a snapshot on the changes on the indirect tax front. Now, before I kind of move on to that, just a small thing. I mean, definitely, as Mr. Narendra Pandey kind of said, looking at the impact of COVID-19 on the tax revenue for the exchequer, where about 80% was in the total revenue. And normally, as businesses, we see revenues falling, we also reduce our expenditure. But unfortunately for this government, they could not probably have the choice. While revenues fell for them, they could not probably reduce their expenditure. Right? So the next alternative factor for them, from a convenience perspective, they would have had three choices. One was the easy one, which could have been by way of, which could have been achieved by way of increasing taxes. Second, in terms of disinvestment. Third, in terms of borrowing loans. Probably the first one, I think, where most, I mean, as I said before the budget, there were many pre-budget expectations, and there was probably more. I would say the number of people kind of having expectations in terms of rise in taxes was very high. But fortunately, I think this government did really very well to kind of not increase the already increased burden of taxes which each of us actually have. Now, what this has resulted is, with about 5 odd lakh crores of the total 23 lakh crores which direct and indirect tax contribute, there was a reduction, right? What was expected as 23 lakh crores, government achieved only 19 lakh crores in terms of revenue. While direct tax, which is income tax and corporate tax, saw a larger fall, the indirect tax is budgeted to fall by about 1,08,000 crores. Right? With this, the total revenue collections for 2021, it is expected that direct tax and indirect tax have become equal. Earlier, direct tax contributed about 55% of the total tax revenue. Indirect tax was 45%. Now, with this dynamic change, both direct and indirect are largely equal in terms of contribution. Now, in terms of these slides which I have, as I said, for speakers like me, probably after the advent of GST, not much has left in terms of talking items. It is probably kind of thrown down, as Mr. Shekhar also said, and Sheikh Vishwanath also kind of echoed. The government has looked at these decisions which have kind of not in their favor, and looked at making amendments which suit or which is probably the intention of the legislature. So the certain amendments which we will kind of discuss, both from customs and GST, have some kind of judicial precedence behind, and it looks like government is strong in terms of having their wish rather than the wish of the assessee who's kind of traveled to courts to kind of justify his point. Now, let me move on to the customs. On customs, as I said, given the time, I may not be able to kind of cover all aspects, but I'll probably touch a few which is, I feel, relevant to this audience here. Now, there are a plethora of exemptions which are there in the customs law. What government did in the previous year was to remove about 80 odd exemptions, and there are many more on the pipeline. What they have kind of done is given a sunset to them to say that these exemptions will be valid for all exemptions which are presently there. It will have a validity till 2023, that is 2 years from now. And those exemptions which kind of come in subsequently will have a validity leaving that particular financial year 2 more years. So with this kind of sunset clause with those exemptions, very clearly we know that exemptions are only temporary, and wherever it is deserving, I'm sure lobby would start, and where the government probably believes that those exemptions need to kind of continue, hopefully would continue. The other important aspect which the government has kind of done is to kind of create a common portal. As we have a common portal for GST, under customs it is expected to have a common portal where that portal will basically enable the importer or the exporter to obtain registration and do all compliances with respect to filing the bill of entries or the shipping bills or payment of taxes and so on and so forth. And the same portal will also be one of the mode for issuance of notices. Ordinarily under the, whichever indirect tax statute or the direct tax statute, the serving of notices is not electronic. There was one particular decision also which said that serving of notice electronic is not the right way as it is kind of given in the statute. But there is an amendment now in the statute to say that if notice can be served even on this common portal. Definitely, I think with all moving digitally, I'm sure we will have to be used to these things as we started, right? Even having this seminar where half of our audience is attending digitally and half is attending in person. I'm sure we will be used to these kinds of mode of being served notices, but definitely I think it is a good step forward. And in terms of the filing of bill of entry, right? Hitherto we had bills of entry could be filed one day after the arrival of the vessel. But now, from an amendment perspective, they have kind of made it that bill of entry will have to be filed one day before, even if it is a holiday. Let's say, for example, if the vessel is arriving on Monday and Sunday is holiday, it has to be filed one day before. And if you file delayed, I'm sure there are delay in terms of there are penal consequences in terms of delay. But the clear intention to kind of ensure faster clearances, bills of entry have to be kind of now filed one day before arriving of the vessel itself. And in terms of, we have seen that there has been a lot of, thanks to anti-evasion and that way from the government, there's been a lot of checks on invoices which are not, I would call it as, let's say, the fake invoices. So to ensure that there is equivalent deterrent for people wanting to issue fake invoices, government has kind of increased the penalties thereon. So for under the customs law, if I claim refund on an invoice which is not genuine, the penal consequences are 5 times the irregular credit which would be there, which is like equivalent to the value of the goods itself. So that's, I would say, a significant deterrent for people issuing fake invoices. Next slide, please. There have been, as Mr. Nityanand also pointed out, there have been many notifications issued to increase the customs duties. Probably, they didn't want to kind of affect the domestic market, so they have kind of looked at increasing the customs duties that way. But then, and as Mr. Nandapani also kind of mentioned, definitely increase of customs duties would not make India as a one market expectations which we kind of had. But probably this looks to be a two-way fold. One is to kind of give protection to needed manufacturing in India. So in the budget speech itself, Ms. Nirmala Sitharaman kind of mentioned that that in certain, like say the electronic component manufacturing in other sectors where manufacturing in India is improving, probably kind of protect them is where this increase has been seen. But the other is also to kind of look at augmenting the revenue shortfall which government probably is facing. Next slide, please. On the GST, I wouldn't kind of discuss all, but maybe a couple of these pointers which are visible. One is there was a Supreme Court decision in the context of State of West Bengal versus Calcutta Club, which basically kind of in the context of where we have a club and its members, it was kind of said that consequent to the principle of mutuality, there cannot be a transaction in the context of service tax and VAT. There cannot be a transaction liable between those members interstate and the club. Now, to kind of overcome that, and probably the other following decisions which are kind of coming in, is where we have this amendment where they've specifically said that transactions between the club and its members deemed to be a supply. So there is a needed amendment in the charging section itself. Yeah. Yeah. So the fourth bullet, which is in the context of SEZ. Now we have many SEZ units in Bangalore, and ordinarily, I mean, one is the SEZ Act, one is the GST Act, and the other is the rules. The rules had a specific restriction to say that if the supply is made to a unit in SEZ, it shall be used for authorized operation. But the condition used for authorized operation was not kind of flowing in from the statute. So there has been a relevant amendment in the statute here to say that whenever I claim the zero unit benefit, so if I supply to a unit in SEZ, I need not charge tax, I can claim the zero tax benefit. As a supplier, I will need to ensure that it is used by the SEZ unit for its authorized operations. Now, here is where we see that there could be a lot of ambiguity on what is used for authorized operation. If I were to supply certain goods, let's say, let's talk about food and beverage, or let's talk about something which is used in, say, the boardroom. Let's talk about certain things which are basically kind of used as promotional material. Now, the context, I mean, the debate would kind of start in as to what is used for authorized operation. And I'm sure there may be a good amount of litigation kind of coming in. It may be appropriate for the government to kind of come out with a clear circular which enlists the list. I mean, if it is goods or services, the methodology to kind of determine as to what is used for authorized operations. Similarly, the tax as an exporter, I mean, unfortunately, the GST law did not provide me a choice. Or I mean, if you take the erstwhile excise law, the export choice say that if I'm exporting goods, I could export it without payment of tax or payment of tax. So the GST law, there's a differential kind of treatment. So only select assessees can actually kind of use the option to pay tax on exports. Now, why is paying tax on exports a better option? Many assessees have tax paid on capital goods which they cannot claim refund as exporters, or there is transitional credit which is from a value perspective so high that their domestic liability is not so much, which can be made use of from a utilization perspective. So those assessees who have exports, if they are given a choice to kind of pay tax on exports, will be able to use these credits, which probably refund kind of may not be available, probably to kind of maximize those transactions. So that was a choice which was there. Probably government realized that certain assessees will make use of benefits. They have specifically restricted certain class of assessees from paying tax. While this condition again here was things there in the rules and probably the notifications, the statute did not have. So the needed amendment in the statute to say that the government has now the power to kind of specify the class of assessees and class of goods or services who will have the choice or the ability to pay tax on exports. In one important thing which will kind of impact many manufacturing units and assessees in Karnataka and elsewhere is the amendment in the Central Sales Tax Law. Section 8.3 basically empowers a dealer registered under the VAT law to issue Form C for purchase of goods for use in manufacture, resale, and for specified kind of additional benefits, which could be for even generation and distribution of alternate electricity. Now, what they have done is for petroleum products, they have restricted the issuance of Form C only for manufacture or resale. So if I buy petroleum products, let's say diesel, for using for alternate generation of electricity, now with this kind of amendment, I will not be able to. So many companies, let's say, when we know that in Tamil Nadu, the price of diesel or petrol is lower than in Karnataka. So many factories, many manufacturing units would actually source petrol or diesel from neighboring state where the price is lower on issuance of Form C for generation of alternate electricity. But now with this restriction, they will not be able to kind of procure this petroleum product against Form C. So that it probably appears to be an intentional amendment where the government does not want to kind of or probably restrict the benefit only to dealers in petroleum products and not to manufacturing units. So with these, largely I have kind of covered my points on customs and GST law. As I said, I think if you were to look at the amendments, largely they are all reformative amendments. There was probably some kind of ailment, some kind of decision which was kind of impeding whatever government probably felt that these amendments are largely to kind of aid the government's wish to kind of ensure that those the different interpretations are probably put to rest. So these amendments, I would not call it as amendments which can kind of help increase or bring about increase in growth in business, but only to kind of bring about reform in terms of compliance. Now, maybe I just missed one particular point is on the requirement to kind of issue the GST audit certificate. Now, the government has kind of brought about an amendment where it specifically does away with or the requirement to kind of certify by a chartered accountant is kind of being done away with. Now, what they have not kind of provided is from a date. I mean, from which date would this amendment be kind of be effective? There was a Twitter clarification which kind of said that it will be from a date to be notified. So more likely than not, for 1920, we will have to kind of get our books of accounts audited by a chartered accountant and file the audit report in Form 9C. But maybe for financial year 2021, it may be that the requirement to do the audit may be done away with. So, I mean, with so many number of audits being there, probably the government felt that doing away with, probably from the intention perspective, from government's perspective, they have felt that through 9C, that is the auditor's report, they have not kind of looked at significant observations, and probably chartered accountants have been well, they do their work in bringing out the observation, but all those corrections are coming out in GSTR 9, which is the annual return, and not through 9C. So the probably government felt that the need of additional compliance may not be required in that case. So they have kind of done away with that. So with this, I have kind of concluded my points. Really thank FKCCI for having given me this wonderful opportunity to share my views and thoughts on the indirect tax here. Thank you.
Friends, with this, I think the presentations by all the four panelists is complete. I had a set of questions which I had to pose to each of them, but I will not be bringing it to that opportunity. But only one question which has come online by the people who are on the virtual mode, that is to Dr. Narendra Pani, regarding the bad bank concept which has been proposed in this budget, putting all the NPAs into one bank, which will be a specialized asset recovery bank, and also 20,000 crores for recapitalization of the public sector banks. With this, will credit flow to MSMEs and businesses? Will it be much better? And do you expect the interest regime to be much softer in the days ahead for trade and industry? With Dr. Narendra Pani.
The issue really is of the bad bank. If it works well, will keep all the bad. Will keep these pressures in one bank and relieve bulk of the major banks which are currently under pressure from bad loans. And that is something that should have an impact on MSMEs, that they don't have to, as the large banks don't have to worry too much about too large NPAs. The risk, of course, is that the system can be played around with. You can have a system where you get a major loan from a bank, and then when it goes bad, you merely transfer it out, right? So the bank doesn't have a responsibility in its lending to be very, very careful. So that is a risk that the government takes, that you can end up a bad bank, and the bad bank can attract bad loans, right? It could encourage the pressure on the banks to worry about bank loans. Bad loans could also decrease. But but the release of that pressure right now, I would think should make the large banks more willing to lend to MSMEs.
So now the questions from the audience, please. Please, Mr. P.C. Rao.
I'm P.C. Rao. On behalf of industries and MSMEs, I have one question to Shankar sir. More than 35% of the industries or service providers are not able to pay the EPL for ESL on 15th. Earlier, there was 5 days in fancy period that was also taken back. And a few years back, I only taken this matter to the court and got the refund to my it disallowed. After that, they took back that and made it up to the return 1 year time. No delay. Bill also is not disallowed. Now they have done one critical there, employee contribution to be paid in time. I have a straight question. We cannot segregate employee and employer contribution in our challenge. We have to pay employer and employee contribution together, both EPF and ESS. Their clarification is we are deducting the employer salary and keeping it with us. That's why we have to pay. It will be disallowed. Employer contribution, I am not able to get the collection. I may pay 3 days or 2 days delay, but I am paying the interest for it. The government takes 18% interest for it, and to the employee they pay only 8.5. There also they make the profit. That's the argument which I put through the leading lawyer at that time, Mr. Parsarthi was there. I took the case. I told this is the case. They cannot disallow, and I got that at that time. It is around 18 years back. 1,47,000. They refunded to me, and I still once again challenge they have to refund to all the disallowed people. They paid 57 IT people afterwards. But now they are putting up once again this thing. I think you can take forward this matter. Because employer contribution, you are not able to pay. You require 5 days. Sometimes even net problem is there. Please do justice for us.
I wish I was the finance minister to have given you relief. The question that you have raised is a very realistic, practical problem for business. In fact, when I was having a small session with some of my juniors in the office, in fact, I said the business community and FPCCI should take a lead and permit the payment under the PF Act to be divided into employer contribution taken. This has nothing to do with the finance ministry. It has to go into the labor ministry, and then this is precisely what we should move. Because in respect, I fully agree with you, the challan for making payment in a year, in a month, is one consolidated challan for both employer and employee. But for an employer, you have been given time till 30th of next year, effectively under the income tax. Right? For employee, you are not even given 1 day grace from the next month. The principle by which all courts gave relief was that at the end of the day, you made the payment with whatever deterrent punishment under the respective act. It is money that belongs to the employee. A businessman should not be saddled with certain things that are not comfortable for him to run his business. The principle under which all these reliefs are given by the court is a very interesting principle known as the government cannot sit in the armchair of a businessman and decide what is right and what is wrong because he knows his financial position better than the government. This is the principle under which reliefs have been given to you regularly. But now the only remedy available is all bodies must now write and say, okay, you have made that law is now to be implemented. From a practical perspective for the business community to ensure compliance, you must know the respective ministries running the PF organizations to make an ESI, to make sure that the challans are divided into two. So at least one I will be able to comply. Suppose let us assume I have to pay 1 lakh rupees. I have got 60,000 rupees in the bank. I can't pay it. But if you permit me to pay by 2 challan, then I will pay the employee's contribution on time and pay the balance late. I think in view of this amendment, it is very possible to get this done. I think the association must take lead and then get it going.
So, next question. Only I request all of you to be brief.
Myself, Vishwanath Pandit.
Next, Mr. Wilson.
This is regarding SEZ transaction. Before introduction of the GST, normally under our earlier law, we used to get a certification. We used to get a Form A. In that Form A, all goods and services list are available. Only that list normally we used to supply. After introduction of the GST, whatever you supply to SEZ, it is not taxable. And straight away, if you get the SEZ GSTN number, that is more than sufficient. Only for refund, under rule, they have inserted, you have to get a certification from the SEZ authorities. What is the intention of this amendment?
if we look at the SEZ Act, if you look at the SEZ Act, the benefit of exemptions from taxes are largely when the unit uses for authorized operations. So that's the genesis. Now, when the statute is worded, let's say under the GST law, we had the specific provision in the section and specific provision in the rules. The rules made it very clear that any supply which is to be treated as zero rated ought to be used for authorized operations. If the usage is not for authorized operation, then the benefit of zero rate or benefit of refund to the supplier as well as to the unit is restricted. Now, since the provision
in rules they have clearly told not zero rate, only refund.
True, sir. The restriction for authorized operation was with respect to refund. But as I said, the statute, the SEZ Act, for giving exemptions, be it to the supplier or be it to the unit, had the overriding requirement to make it for used in authorized operation. So maybe to give force to the intention of the provisions under the SEZ law is where we have the specific. Now, more likely than not, the way in which it is used, right? When we have the approval taken for the SEZ unit, very specifically, the areas which are used for authorized operations are demarcated, activities which are for authorized operations are demarcated, but unfortunately, the ambiguity kind of comes in for the supplier. How do I know the business of my unit? There may be certain activities which I do not know, or certain goods or services which he is purchasing which I do not know, is using for other than authorized operations. Right? So there may be, even in the SEZ zone, there are several permitted operations which may not be used for authorized operations. Now, if I am the supplier for those, how do I get to know it is for those operations which are not authorized or otherwise? So definitely, I think this ambiguity is there. But to put it simple, I think the intention of the statute for giving exemption is very clear. It is for authorized operation. Maybe the legislature can do it good if they can kind of bring in with specific clarification how to determine as to what is used for authorized operation. While the definition in the SEZ Act is also there, but I think there is still a lot of ambiguity on how, as a supplier or how, as a unit, I can determine as to what is used for authorized operations.
Like in earlier law, they used to get a list of authorized operations.
Next, of course, Naveen will.
My
And of
question
course,
is to
next to Abhijit, past president, Mr. Kasaji, agriculture.
my question is to Dr. Narendra Pani. We all accept that this is a very bold budget, policy budget by the FM. All have accepted the deficit 9.5% for the growth of the country. But at the same time, having this much of deficit and inflation, where the finance minister has taken care of the migrant labor, cluster of industry, MSME, employment generation, all the capital expenditure, railway, road, port, will face you after 10 years, not today. How you are going to meet your borrowings and how you are going to contain your inflation. So if the things goes wrong, how will, in place of this, if the Atmanirbhar Bharat PM's plan is there, why not they have got for the cluster of industry to all the states and given the employment to the migrant labor? This is my question.
Thank you for that. I think the main issue, I agree with you, but except for one thing which you might want to give some leeway to the finance minister, and that is on the need for a larger deficit. Demand has been down, you need to recover, and there have been expenditures that were unavoidable. So the deficit, I think, is partly unavoidable, but it's also partly intentional in order to try and boost demand. That you might like to consider. On the other point you have made, I couldn't agree more that we definitely need to look closely at the whole process of not bothering of the assumption of perfect mobility. That it doesn't matter if for certain jobs in Bangalore I need to, or Bengaluru I need to get workers from Jharkhand. That is an assumption that we need to look very closely, because that is also increasing costs. It's increasing costs at the lowest end of labor skills. It's one of the reasons why Bangladesh is beginning to do much better in the garment industry than we are. Right? So these are issues that need much closer attention, and we shouldn't get stuck between two stools. We fall between two stools. We cannot go out in pursuit of large high-tech industry thinking that will take us all. It might, and certain sections of it's an important part of the economy. But at the same time, if you give up all that you can get, whatever benefits you have traditionally had from low-skilled labor, you can end up really caught in the middle where you have not yet got the full benefit of becoming a high-tech center, and at the same time you have lost out on your traditional strengths as a low-wage industry. You need to find a strategy that can meet both ends. We cannot go with a single strategy that focuses on, like in many years before 1991 we focused entirely on the low skill industries largely, and now we are focusing completely on trying to support high skill industry. But that we need a strategy that can deal with the interests of both. It calls for a more sophisticated analysis, but certainly I agree that we must rethink the assumption that it does not matter if workers have to travel thousands of kilometers between work and home.
Thank you, Professor. Next question is the virtual board. Vice President Mr. J. Glass. J. Costa, sir.
Good evening. I'm CMA Sripadak, accountant. Now, Section 35(5) of the GST Act will not be there. On the face of it, appears that it is going to be beneficial to the auditors, the taxpayers. But I feel that it is detrimental to them in the long term, and it will increase the corruption and litigation. Because a professional cost accountant or chartered accountant are going to audit the GST records within 6 months from the end of the financial year, and in the course of their audit, they are going to advise their clients what the remedy for the mistake they have committed, and they will also guide them as to what they should do and should not do, so that for the future also the right course of action is advised by them. But if the department is going to audit, if the government trusts the department officers more than the professional accountants, we don't know when the department officers are going to conduct the audit. By the time they take up for audit, 2 or 3 years would have elapsed. So the interest liability will go up, and when they find out some mistake, they are going to leave penalty also. And to get it right, obviously there may be some element of corruption, and if the people, if the amount involved is very huge, obviously litigations will improve. So that I feel it is detrimental to both industry and the government. Your views, please.
I think you're optimist when you say some element of corruption. Will be much more.
I agree with what you say. Definitely from a requirement from an audit perspective, yes, it has a noble need, but is definitely from nobody would want to kind of evade taxes. I mean, my experience of doing audit for several companies, it is that more likely than not, there are reasons of when the additional tax liability kind of comes in. It is consequent to omission or probably a different interpretation of the statute. As an auditor, we bring in consistency in terms of reviewing various industries in the same kind of various companies in the same class of industry, and then probably enhance the level of compliance under the GST law. Maybe if the GST law, as Mr. Shankar said, it could be something like a 10-pager, right, which is as simple, which does not call for different interpretations, and the compliance levels are probably simple. Then in that kind of situation, not having an audit is probably understandable. But as today, the law is probably a summary of what was there in the erstwhile law. There are probably, if you see the various advanced rulings which are going to come in, among the advanced ruling authorities itself, there is a lot of different interpretations which are there. So a law which is not settled, right? And with the draconian provisions in terms of taking the time limit for taking credit, those and probably the draconian provision in terms of matching the credits also, where I may have all the documents in my hands, but unfortunately because my supplier did not do certain things, I kind of lose on. So all these things probably get probably noticed or highlighted to the top management through the audit mechanism. So definitely, I'm sure the institute or the professional bodies would definitely make their recommendations to continue the audit. But I think the intention of the legislature was very clear with this renewal. They have probably not felt that as practitioners, as people who were to do audit, in their audit report, no major observations kind of came in. We largely became protective to our assessees, right? While we may have kind of helped them to kind of file their GSTR 9, which as an auditor we cannot do, and have all those additional liabilities disclosed through GSTR 9. But when it came into the reporting to the legislature through GSTR 9C, which is the audit report, we fell short, right? So therefore, it's the two-sided coin. I think from government's perspective, they have probably removed this, thinking that as a professional body, looking at the underlying need to kind of have a check and balance. Probably they felt that we fell short. We have to kind of probably accept it with a pinch of salt.
Mr. Anand, yeah, your question. Because on this audit, the people who had the audit in their hands, they cried for more time. People who wanted to get into the audit, they cried for opportunity. Finally, what happened is this. Yeah.
I'm on the point of the NPA banks. See, it's a good thought maybe to set up an NPA bank so that all the NPAs can be handled with a more focus on the issues. But I have a different thought which comes to me here. If you transfer these NPAs onto these NPA banks, the ARCs, what will happen to the banks which are there? One of the thoughts given by Mr. Shekhar Vishwanathan, they'll concentrate more on financing to the MSMEs. A little more interest will be there, and things will be better off. But sir, I have a different thought there. As it is, when you look at the banks in the type of working with them, either do. They try their best to say that they don't take any responsibilities. As far as possible, they pass on the responsibilities. I can tell it in the open forum directly also. But now, if that is the situation, and if they now know that the NPAs will be transferred to another bank, and in my bank I don't have to worry about it, they may not even go to the extent of really sanctioning, or on the other end of the spectrum, they might recklessly keep, sanctioning the things. How do we tackle this situation when the banks are not responsible for the NPAs?
I think it's personal accountability that will ultimately carry the day. There is no other mechanism. You would not like to be held personally accountable for any loan that you have sanctioned, particularly if you have not followed all the steps in terms of due diligence, in terms of checking out the state of the industry, checking out the promoter background, checking out the taxation structure, etc., etc. If you've done everything and still it becomes bad, in spite of the best efforts of the promoter, only those loans should get transferred to a bad bank. Not where there is, been palpable fraud happening, either with the connivance of the employees or with the connivance, joint connivance of the promoter himself is been.
My last question to Shekhar. Only one question. The budget 1.997 lakhs crore to be allocated for 5 years of manufacturing sectors.
This is the one side. The other side is the FDI will increase from 49% to 74%. Our Prime Minister says always Atmanirbhar. How can we match this?
Pani also will answer.
budget, 1.97 lakh crore has been allotted for 5 years of manufacturing sector. We all believe manufacturing sector is the backbone of our country. Other side, the FDI has been increased from 49% to 74% when we talk about Atmanirbhar. Apart from that, there is going to be today maybe an insurance, tomorrow it may be a manufacturing sector also. I want your clarity.
No, I think let's not confuse between what Atmanirbhar says. Atmanirbhar is about self-sufficiency in your manufacturing processes, in the way you conduct your business, etc. You don't have to depend on foreign talent. You don't have to depend on anything coming from overseas. You make it here in India. But I think this issue about getting insurance sector moving from 47 to 74, 49 to 74, is about attracting foreign capital to the country. And that I think is absolutely necessary. I don't see a contradiction in what Atmanirbhar is and this particular approach. We do need foreign capital, but there be no mistake about it.
Sir, one last question to
Sir, sir, your views on this. Professor Pandey, sir. Pandey, sir.
Yes. So I didn't hear the question. Would you mind repeating it?
So the question was like the FDI in the insurance.
Oh yeah. That. See, the issue really, I think, is the concept of Atmanirbhar has been changed. Originally, some decades ago, when we spoke of self-reliance, it included capital, that we wanted to support Indian industry. But now, in effect, what we are claiming is anything produced in India. Even the Oxford vaccine we are taking as an Indian, as a sign of Atmanirbhar. So as a shift in that, it's a quiet shift, but it's a very substantial shift. And so anything produced in India, we're treating as Atmanirbhar. So if I'm getting foreign capital to do something in India, that will also be seen as being Atmanirbhar. It is no longer a matter of ownership as it was a few decades ago. This has not been widely debated, but it has in effect taken place. This change has in effect taken place.
Sir, this question is to Sekhar sir. Sekhar sir, under this budget, there is a lot of capital expenditure proposed by the finance minister. Railway, telecom, infra, JGM for drinking water project. How MSME can utilize this expenditure? Businessmen and industry can utilize this expenditure as an opportunity.
Yeah, I think a lot of these projects in the infrastructure, road, water, related projects are going to be done by the big companies. But the big companies will also have to rely on the supply chain. And that supply chain, the MSMEs are a very important part. That's why when I spoke, I mentioned that it's the responsibility of the bigger companies to carry the MSMEs with them. In their operations, in their financing, in their method of dealing, etc., etc. And above all, making sure that the big companies pay the MSMEs on time. I think that is very, very important. And then the MSMEs will be able to find their feet. I think that's the only way. I don't see any other way. Yeah, of course, it's an opportunity for MSMEs, but I don't think MSMEs by themselves will be able to bid on some of these major projects on their own steam.
Yeah, before the last question will have, I think that there is a question on the press. The various amendments which have been brought in as far as the press are concerned, whether it is the sale of property, then the donations made out of the corpus donations, etc. So, will it not make the life of the press difficult in ideas? It is already difficult, whether it is CRA registration, opening bank accounts in the State Bank of India, various things which have happened in the last 1 year or so. So will these amendments not make the funds in the trust, because it was always considered as public-private partnership. The funds in the hands of the trust, will it not keep evaporating from water?
the amendments that have happened to the provisions of question of income tax law are very specific, in as much as it has given a relief in respect of education and hospital from 1 crore to 5 crore. Then it has said, it has effectively overruled the decision of the Municipal Academy's case, where they said that if you borrow a loan and incur money on expenditure, it was allowed as application. Now what they have said is you are claiming double. What you are doing is, first when I spend the money you are claiming, then for repaying the loan you are claiming. They have only regularized that aspect that if the trust at the peak of its financing, as let's say spend 20 crores of rupees, you are entitled to the entire 20 crores application. This amendment is not something that needs to be worried, because earlier most of the trusts were claiming when you buy a property, you are claiming application, and next 20 years you are claiming depreciation on it, and it was allowed judicially. And the government thought that it is not correct that you spend 100 rupees and claim 200 rupees for a period of time. It brought the amendment, and I think that amendment is justified because the courts interpreted the provision as existed in law. Roads are well settled, can't supply omissions of the legislature. It is for the legislature and parliament to interfere, correct the errors that it has made, and that's what has been rightly made. I don't find any error judgment on this.
Sir, having seen this budget, Atmanirbhar Bharat, towards Atmanirbhar Bharat. So, don't you think that our government, when it comes to Section 35, the removal of GST audit and all, don't you think that our government is trusting or is more dependent on system-oriented than professionals? They are not trusting no professionals. It may be one of the reason maybe even our frauds committed by some of the professionals, which everyone knows, which has come in newspaper. So don't you think that our government is slowly trying to be system-oriented rather than giving audits for professionals? One question. Second is regarding this asset reconstruction company, NPS. Being an insolvency professional, I know when it goes to asset reconstruction company, the liquidation value is so low. Not only they're having 95%, till 95% haircut. How will this help in, it will only lessen the burden of the banks, but what is the recovery rate? This is what I want to know. What is the intention of the government regarding this? Can anyone throw some light?
So I better not disagree, right?
Yes, it's
so it reminds me of a situation. The comet came and the king died. So probably the fact that the comet came probably was understood as the reason why the king died. Now, while probably saying this is, I think Atmanirbhar is basically reinforcing what we would want to, or we have been trying to do. The requirement to audit and Atmanirbhar definitely don't see in terms of any correlation there. But yes, as you rightly said, Madam, I would say from a timing perspective, as I reiterate, is the GST law as from a stableness perspective and interpretation perspective as stable as the need for check and balance is not there. Definitely, as professionals, we will contribute in terms of check and balance. Probably the government felt that probably the value addition which has been professed probably was not forthcoming. That's why they. So we ensure as professional bodies we would do recommendation to government in the interest of exchequer. I think in terms of our revenues, in the interest of exchequer, in terms of having a system, having a check and balance of external auditor is very important. So therefore, with that intent, I'm sure we will do that recommendation. Yes, it may be that this appears to be the clear intention of the legislature, and probably an alarm for all the professionals that we should not take our work lightly.
The end of the session, before requesting Mr. Aradhya, the co-chairman, to propose a 30 vote of thanks to the implemented. Unless, may I request all of you to put your hands together. The appreciation, the excellent panel discussion what we had today. To Professor Narendra Pani, who is the virtual mode, and the three eminent people who are here. to enlighten us on the various aspects of budget. Over to Mr.
Today, the thoroughly analyzed speeches of the four eminent personalities here today has brought in the best of the figures and items which have been there in the budget for Atmanirbhar. It brings in the policy of Atmanirbhar to each one of us, and they have succeeded in making it understand to us in a better way as what is Atmanirbhar. Special thanks to all the four of them, but let me take that individually also. The macro analysis of the budget by Mr. Narendra Pani has dealt with the borrowing and fiscal deficits and the banking system. There was also a word of caution from him. The word of caution that the government should also be prompt in repaying the foreign debts. The foreign debts is always a sword on the head of everybody. Thank you, Mr. Narendra Pani. Even though he could be here personally, he has done a lot for help to us by being on the virtual front. Mr. Shekhar Vishwanathan, my friend, good friend, dealt with the MSMEs issues and also said that the timely receipt of bills and reconciliation receivables from the large industries, that's very important, I underline that, the large industries, is equal to winning half of the battle. He also dealt upon the banking system and how large industries can get committed to the MSMEs and take them along with them for the betterment of the MSMEs as well as for the economy of the country. Mr. A. Shankar, good old friend of mine. Thank you, Mr. Shankar. With his wisdom and experience, blended both the positives and the negatives of the budget points on direct taxes, which was for all the participants to make a note of. See, he took it also in such an analytical way. One was positive and the next one was the negative. But I feel each one of them were very positive to all of us as participants hearing you. Thank you, Mr. Shankar. As usual, Mr. Deepak Kumar Jain, an expert in the indirect taxes, dealt in detail on the customs, GST and other taxes. Our special thanks to Deepak Kumar Jain. I also would like to add another point of thanks to Mr. Deepak Kumar Jain for sponsoring this program today. Thank you very much. Well, it's my duty to thank my chairman, Nityananda, for coordinating onto this program so well, selecting the best of the speakers and initiating this program fully. Finally, this program would not have been this kind of a success without you participants who are here physically and also on the virtual platform. Thank you all for making it, for the interactions which we had also. Thank you one and all.